Hello, my name is Peter, and I am part of the Interlake Investing curriculum. And I would like to talk to all of you about value investing. Overall, the stock market for the past 20 years have been bullish, but I just wanted to talk to you guys about how to properly invest. Um, Obviously, the previous lesson that we've done have been on options trading, but I wanted to focus on something that I personally am more experienced in. I'd like to educate you guys on my experiences thus far. And in this video, I just want to give you guys some general tips about what to recognize when doing value investing. So value investing is usually through finding the intrinsic value of a company, and what an intrinsic value of a company is usually to many calculations such as Warren Buffett, Charlie Munger, many fabulous investors. What they do is they like to add up the free cash flow over a span of 10 to 15 years, and they also take into account the interest rates as well. And sorry, but that's pretty much like the general thing about value investing, but there's a lot more things to take into account for. But that's just what I wanted to quickly mention out there. And that's the general body of value investing that I just wanted to introduce you guys first. But first of all, when approaching value investing, how should you be mentally before you start investing? How should you be thinking? Well, what many investors, good investors, do is they like to create to themselves a realistic, conservative, and consistent rate of return. And what that does is a rate of return, pretty much they account that eventually into the calculations. And based on how much they expect to be returned annually, that also impacts their investment and like the price they want to buy a specific stock at specific stock at. But more on that later. And also what I want to mention before getting to value investing is you need to ask yourself, what do you have an edge in? I remember reading the book by Peter Lynch, I think Up the Wall of Wall Street. I don't know, I think Beating the Street. That was one of the books. But one of his main messages throughout that was to really show how general people around this world have an edge. This can be towards an industry, towards a specific commodity, specific niche. They all have some kind of edge over other people. And this is usually through, knowledge, and which is what they gain from everyday practices. So one example can be you can be a soccer player. Like I play soccer, and I kind of sometimes can realize, I guess, for example, the specific products that maybe Adidas or Nike makes, and I can see, okay, how do these companies make specific revenue? How do they generate that? What are the expenses up front when doing that? What are the debts that they're taking on? Maybe they're investing in specific properties to really sustain their tangible value of their company. But there are just many things, many edges that you have and you can utilize to your advantage. Which brings me to my next point, said by Warren Buffett, investing in what you understand. Many investors, they always like to bandwagon. They really like to look at the news and be swayed by these short-term fluctuations. And this can be, um, for example, there can be news of the Feds, including some specific policy, and due to that, that can cause like a stock, especially a volatile stock, to go down. And the main issue with many investors is they get so scared and tensed up from the short-term fluctuations to the point where they can panic sell, they can forget the things that the reasons and rationale they use to eventually come to their financial decisions. No, they use and they get swayed by the herd. They allow other people's opinions to kind of manipulate and change what they were confident in. So in this, I just wanted to introduce that value investing is supposed to override those fears. You need to have the guts moving forward when hitting the markets, and it's something I struggled with when I first started value investing. But yeah, investing in what you understand is very important, and that's one thing I wanted to put out there. And another thing that I wanted to talk about is the general financial analysis. So in financial analysis, there's many ways to really come up with a stock and think about what is valuable. But when value investing, you need to ask to yourself, is this a good company? Is this a good company to invest in? Does it sustain and create long-term returns over time? And is it selling for below what its intrinsic value is? And I'm going to be saying intrinsic value a lot because that's usually the best thing to really judge the value of a company. And it's also according to calculations that you yourself as an investor utilize. And also, before jumping into a company, you also want to make sure that it's a company where you're so confident in to the point where news and all of those short-term catalysts don't phase you. Um, yeah, for long-term value investing, it's got to be a company you're confident in, and you see a lot of positive long-term prospects. Um, yeah, this is the general, like this is what I was talking about, the general mindset when approaching value investing. You don't want to be too like feisty or reckless with your financial decisions. You need to be very conservative, but you do also need to be brave and confident in what you're investing in. And yeah, so pretty much on my screen, what I have here. So this is one of the companies that my friend invested in. And he bought it sometime, I think, at $300 around. I forgot when, but pretty much this is when I was first getting started with investing. And in general, I didn't know what the markets were when the pandemic hit. It was I just didn't have as much knowledge. But over time, I was able to ask a lot of people who are good at investing, like my fellow friends, Max Druckman, Dylan Wallace, and Pavan, who are all part of this project. And yeah, and pretty much the reason behind his decision, and I was asking, oh, the stock's going down. How come you bought this stock at this specific price? And the main reason he chose to buy the stock was, I'm recording a video. Come on. I'm recording a Come on, it's at like 6 minutes. Come on, just go. So sorry, sorry for the delay there. But pretty much the reason why he bought the stock at that specific price was not because that the business was like depreciating according to what others are saying. He bought it because he understood the company, like I mentioned earlier, and he saw the company as long-term has very positive long-term prospects. He was talking to me about the tangible assets of trucks and buildings and how they had a very high occupancy rate, which caused them to have very good returns over time. And due to the industry also being very hot and this one having a lot of competitive advantages over their competitors and also having very high profitability, especially in their cash flow, this resulted him to invest coolly. It caused him to forget the short-term fluctuations and invest over time. And he was able to, I think, around double his money in less than a year, which is pretty impressive. And but yes, this is the general blueprint about value investing. This is what it's all about. There are many ways to invest. There's a lot of specific formulas, but there are some useful conservative ways that I want you guys to utilize, which I'll teach later in future videos, which will be probably next. We're going to be talking about how to calculate the intrinsic value of a stock, how to look at like annual reports and things like that, and really identifying the specific factors that you're looking for before investing. I'm also going to help you guys differentiate tangible and intangible assets because usually tangible assets are the ones that produce and have specific, obviously tangible value, which makes the company more valuable. And it's also with tangible assets is usually easier to calculate intrinsic value and really project returns over a specific time span that you're satisfied with. But yeah, pretty much this is the general blueprint of value investing I wanted everyone to get at. Again, this isn't financial advice, but we just want to make sure we provide a clean cut education for the stock market in general. And we just want to share, I guess, the experiences we had just before you guys want to get started investing. So you guys can learn from our mistakes. You can learn from the specific things we learned. You can learn the specific things that we learned over time. And yeah, thank you very much, and I'll see you guys in my next video. All right, stop recording.